2018 paper, question 9b, balance sheet. So in the balance sheet, we look back at the question and look for information related to the balance sheet. So we know we have some information up here, and then we also have some down here. So we've already ticked off what we've used, so we'll just go on then through the balance sheet. So for the purpose of this question, I have already ruled out the balance sheet here. So you just start as normal, balance sheet of Jack Manning as at 31st of the 12th 2018, and I've started off with tangible fixed assets. There are no intangible fixed assets. So in the question we see there were some fixed assets, so we'll add that in here. And as you can see there, fixed assets is 305,000. Now, we did purchase some equipment in March, and you'll see there for 6,000. So we need to add this into our fixed assets. So when you add those two together, you'll get 311,000. There's no mention of depreciation, so we'll just go on with that there. So that is the only tangible fixed assets that we have. So we move on then to current assets. So current assets are normally made up of closing stock, debtors and some cash. So closing stock, that was mentioned in the question, so we look back at it and we'll see here it was 29,100, so we're going to add that in, so 29,100. Also there was mention of debtors, and if you go back to the question here, you'll remember that when we had sales in May, all sales were paid for 1 month after sale. So this 81,600 has not actually been paid to us yet, so we are due that. So we're going to put this in now under current assets. So 81,600. And the last piece that we'll put into current assets here is our cash budget balance. Okay, our balance. Okay, and from our part A, we work that out as 63,800. So I'll just give you a minute now to add up those three figures. And when you do, you should get 174,500. So that's there. So now we move on to the next part of our balance sheet, our creditors. So there was one mention of creditors here, and that was to do with our purchases. So again, our purchases here for May, they were due to be paid 1 month after payment. So we are due to pay to our creditors the 34,500. There. And because there's only one creditor, we can put that straight into the second column, 34,500. So I'll just give you a minute to subtract that away. And when you do, you'll be left with 140,000. And that 140,000 is our working capital. And then when you add that to our tangible fixed assets, you will be given the first side, which is 451,000 of our balance sheet there. So 451,000, so that's the first side of the balance sheet. So we'll just take a minute now to go back and tick off anything that we have used there. So our fixed assets, and then we've used the equipment, and then our closing stock. So moving on to the final part of this balance sheet, and it's our financed by. Our financed by, our creditors amounts falling due after 1 year, is made up of normally a loan, our share capital, and any net profit, and then drawings. In this case we've no drawings or we've no loan, but we do have capital. And we just look back to the question where that was, and you'll see here under capital, and it was 400,000, so we can add that straight into the third column. so 400,000. And then there was our net profit also from the question. And if you see here under net profit, it's expected to be 51,000. So we add that in under capital. So we look back to our question to see if we've forgotten anything. Is there anything else? So I'm just going to tick off the net profit that we've used. And we've used all the other figures there, the capital as well. So the final part here, we're going to add the two of these together and you'll get 451,000, and that is capital employed, and you'll see now that both figures match.